On open exchange, another company reporting is Brimstone, reported a 96% increase in full-year headline earnings per share to 346 cents. Company declared a dividend of 25 cents. Mustaq Brey, who's the CEO of Brimstone Investment Corporation, joins us for more. Good morning, Mustaq. Some of those numbers look big, and perhaps you just need to explain what's behind them. If you're looking at an over 90% increase in earnings, did something right there, or there was corporate activity which influenced it. Total assets up by 1.1 billion to 5.7 billion. So perhaps just let's go behind those numbers.
Yeah, morning to everybody. And David, yeah, it's been a very good year for Brimstone all around. You know, we had a major jump in the actual value of our underlying investments, and it's really a broad front. It's not just one, the main one being life healthcare, but also on some of the other investments, including our options in Nedbank, Old Mutual, Tiger Brands. You know, they've all grown quite nicely. And then also underlying businesses, they've done well. And then for the first time this year, you've seen our actual dividend income at the centre has grown to 150 million rand. So all around, it's been a very, very good year for us.
Talk us through your investment strategy, Mustaq, and how it's evolved over the past year, because it had to have been a tricky period with regards to your investment decisions.
Look, when we started off, you know, we were just like any other BE company. We were very opportunistic, and that was 15, 16, 17 years ago. Over the years, we've sort of tried to become your good BE partner. And in that way, we've got some option plays where we've leveraged, where we've maybe only put on 2.5 or 5% of the money. So we've used that leverage to our advantage very, very well. And then at the same time as well, we've gone and grown businesses. For instance, Line of Africa, we started off from scratch 13 years ago. And then we've been partners in the fishing industry with both Sea Harvest and Oceana for a long time as well. And in both of those cases, we've in actual fact increased our shareholding over the last number of years that we've been involved with those companies. So, you know, it's really been, Brimstone has evolved into being what it is today. And we've got a nice rounded portfolio of investments. We've now got 15 or 16 investments, which are doing very, very, very well overall.
Mustaq, it's an interesting model, isn't it? Because on the one hand, you have completely passive investments in big companies. You mentioned Nedbank, for example, and Life Healthcare. And on the other hand, it sounds like you're quite hands-on with some of the investments. The other question is that the degree of exposure to the clothing industry. That's quite high. Now, isn't that a bit more risky?
You know, David, at the moment, our actual exposure to it's just over 1% of our actual net asset value to the clothing industry. So, and yet we're keeping 750 people employed. We're keeping 750 people's families fed every week. So we're quite happy with that. And it's not a big exposure at all. It's 1%. In the year under review as well, it made some profit. It made just under 5 million rand profit. And we're very happy with that.
Overall, you highlight in your commentary that you know, you've been exposed in your cash to your cash generative quality assets, mainly in defensive sectors. On that note then, what's your view on the resources space right now? Because valuations are certainly enticing, but valuations sitting low for a reason.
Well, you know, as you've seen with resources, you know, we had a bit of a foray into resources as well. We went into Galaxy Gold. In the year under review, we took a write-down of 32 million rand. It hasn't been a very happy area for us, but we'll look and see if we could see value, if we could see the right investment, we'll certainly go back in that area. But it's a tough area to be in right now.
Mustaq, is there a kind of philosophy that says we try to be in sectors where some of them, or all of them if possible, but some of them, or at least one or two of them, are going to be making money? It's that it's the equivalent of, say, Billiton, which has you know, various resources, and one of them is making money at any given time. So do you make sure that you're covered in terms of, for example, consumer spending, in terms of banking, in terms of fishing?
Yeah. We've learned, you know, we in some of the grudge industries like healthcare, whether you like it or not, people will always be looking for healthcare. And then we look at insurance as a grudge purchase, but yet people will always insure their assets. And then at the same time, we like the food industry. In actual fact, for the first time this year now, our investments in the food sector is bigger than our investments in the healthcare sector. Mm-hmm. If you do a pie graph of our actual investments, we are, I think, around about 45% in food at the moment and 35% in healthcare. Okay. So, you know, we've got those areas that we've invested in, which people will always be supporting.
Yep, but taking a look at the numbers, as we've said, certainly impressive. Those headline earnings rising 96%. Mustaq, how sustainable is the scenario moving forward?
Look, I think the big thing you have to look at, we might not be able to return 96% on an annual basis, and I accept that because, you know, we've had quite a big increase in our fair valuing of our investments. However, if you look on the sustainable line, if you look at our dividend line this year, it's up to 150 million rand. If you look at our equity accounted earnings line, it's up substantially as well. And that's showing that, underneath all of this investment hype, there's also a solid company that's been developed, which on an annual basis will hopefully be able to return good dividend income to its shareholders as well. And if you look at our actual dividend income this year that we're paying, our actual dividends which we received went up by around about 40%, and therefore our dividend which is going out to our shareholders has gone up by 39%, which is quite a similar amount.
Of course, the 11th consecutive dividend that has been paid by Brimstone. Mustaq, a pleasure chatting to you this morning. Thanks so much for having joined us. Mustaq Brey is the CEO of Brimstone.